technicals to do it. Okay. What do I do with this information? Look for headline items that seem to have an importance in current market environment and how it may affect price moves. Get a feel for what factors are contributing to the market sentiment. All these things we've discussed throughout this entire presentation, which we'll recap. What important fundamental reports are due? Go to Forex Factory or Forex News, or go to any economic calendar to see what reports are due in relation to the currency pairs that you trade, and how you think the banks will anticipate the moves. Look at your economic calendar. The central themes are interest rate spreads, rate move expectations. This move will make you aware of why trends are in place, and you want to trade in the direction of the capital flow towards the market, expecting certain aspects of the marketplace. The sentiment, the flow and the sentiment and the theme. Okay. Okay. What do I do with this information? Understanding the fundamentals will expand your view of this market and offer trading ideas and make your trading approach more versatile. You will see way more trades when you understand just the basic fundamentals. Okay, you'll see a lot more trades. With a steady review of the fundamental aspects of the market, you'll slowly acquire market knowledge and savvy that will improve your trading. If you're uncertain about any of the terminology, just use Google. Okay. So here's what we do. We're looking for economic growth, interest rate differentials, economic growth, CPI, GDP, PPI, interest rate announcements that are coming up, and the verbiage used in central bank statements, inflation. Okay. Listen to what the market is expecting. Okay. And all of these things I covered in this presentation, so now you can go back and you can look at what the market's expecting and how they're pricing it in. Is the market going to hike rates? Are they going to cut rates? Are they going to leave rates on hold? And how is that going to affect the market flow? The market will price in now what they anticipate will happen in the future. Okay? So what I will do on a daily basis is, based on the currency pairs that I'm trading, I will look at the general overview. So you want to look at John Hardy's reports or look at the bank reports and say, what's the general tone of the market? What do they view as important? And we saw a lot of reports that will basically say, this is the reports that are important that came out overnight. This is what's important in the short term, and this is what's important in the long term. Then you want to look at your economic calendar and say, what important events are coming out this week? In fact, let's go to, first of all, major bank reports. Okay, you can go to saxobank.com. You can go to forex.ch and look for their daily currency strategy report. I don't have any affiliation with any of these companies. Forexnews.com, you can use their economic calendar. They will also email you daily updates. Saxo Bank, they will email you daily updates, but you'll also be on the list for other stuff, so keep in mind that you probably get other mail from them. But these guys, Forex.ch, they'll forward you bank reports from Commerce Bank from Germany each day. All right. Okay, so what I'll do is let's go to, just change windows here. There we go. Let's go to Forex Factory. You can register as a user, And let's just go to the economic calendar. And this will give us the economic calendar from last week. And let's have a look. Okay, what I'll do is I'll say, well, what currency pairs am I trading? I'm trading the Australian dollar. So I'm trading the Aussie yen. So what's important to me? Well, this big, bold, factory here, this red factory means it's an important report. It's a market mover. It's the PPI. Y'all know what PPI is? Yes, you do. It's the well, if you don't know what it means, you click on this little guy right here, and it says the Producer Price Index measures the rate of inflation, which we've talked about all day long, the rate of price changes experienced by manufacturers when purchasing goods and services. A rising trend has a positive effect on the nation's currency, okay, et cetera, et cetera. Then it'll give you the releases of the reports. Look, it came out at 1.9% versus 1% expected. What's the Australian dollar going to do if the PPI comes out at 1.9% versus 1% expected? Are you sleeping? It's going up. Okay? It's going up because if PPI is going up, then inflation's going up, interest rates will go up, Australian dollar will go up. We buy Australian dollars. Okay, this is longer term. It's intraday and it's also longer term. Well, look, I'm an Australian dollar trader. CPI comes out on Tuesday, and it's a big red factory. And CPI, what's CPI? CPI is Consumer Price Index, which measures the rate of inflation, rate of price changes experienced by consumers when purchasing goods and services. A rising trend has a positive impact on the nation's currency. Well, it comes out at 1.3% versus 1.1% expected. It's higher than expected. It's red, so it's a market mover. So the Australian dollar is going to go up. The Australian dollar is going to go up. Okay? This is what I do. I mean, I've got other terminals and things that give me this information, but this is great stuff. And and we've got other reports that come out. Look at this. MPC, Monetary Policy Committee meeting out of the UK. Look, 9-0 voted for a cut, but actually the market said 9 people are going to vote for a cut. 9 members are going to vote for a cut, but only 7 voted for a cut. That means they may, there's less opportunity for cuts, so that's bullish for the pound. Okay, just work with me on that one. Just trust me on that one. It's bullish for the pound, so the pound would have rallied on that day. Okay, I trade Canadian dollar, core retail sales. Oh my goodness, lower than expected. Canadian dollar is going to fall. Okay, in New Zealand, an interest rate statement. Okay, came out as expected. Well, the market already priced that in, so if it came out as expected, well then let's listen to the comments. So the comments are dovish, which we studied that earlier in this session, that the comments were dovish this week, and so the market sold the New Zealand dollar off a little bit. Oh, look at this one. Okay, the German IFO. We talked about this all day long. The German IFO. Okay, the market expected 104.3, came in at 102.4, and what is the German IFO? Toby, what's the German IFO? Okay. Information Forschung Business Climate Index measures the mood of firms in manufacturing, construction, wholesale, and retail. Okay, from 7,000 firms. So it came in at quite negative. So therefore, that's why we saw the big fall in the euro on Thursday. All right. So and then a lot of others. So you just want to keep an eye on this stuff. All right. And we are going to move away from this page. Now, we are finished the presentation. And to the best of my knowledge, we're finished. It's been a pleasure. Now, if you guys have questions, I'm happy to answer any questions that you might have. No, you know what? We need to take a break, then we'll come back for questions. So think of some questions. We need to take a break because the recording, we need to assemble the recording. Okay? So hang on a second. Okay, folks. Let's. If you guys have some questions, I'm fine to answer some questions. Alex, could you talk about the London fake out? For example, if the dealers know what the pound-dollar pair is going down, why they stretch the price, forcing the weak shorts out of the market? Sometimes as the flow gets going at the start of a session, you might see, you know, if they let's say, for example, this is a 5-minute chart, and let's look for an example here. That day was not an example. This is a 5-minute chart, and at the open of the London session, which is, you know, roughly this area here, sometimes they'll allow flows to drift up a little bit and to accumulate some positions looking for shorts. Again, we don't know exactly what happened in the fundamental scenario here, but effectively price came right up to this level of resistance here, to this price resistance here, and price fed up from 80 to 60. There was a nice move up into resistance, and then price dropped. But you know, sometimes they'll pull price up a bit before changing direction on the day, but there's no real definable pattern there. But it's something to look for in any event. Greg, here, let me, sorry, Greg. There's the link for the special, for today's special. Okay. What Christina means is that the optimal trade entry is more detailed in the specific area of trade entry. It's not more detailed in terms of the broader scope of my trading approach, just that specific area of trade entry. It's kind of like taking trade entry and position management in the Pro Traders course, putting a magnifying glass to it and getting into all the details. Okay, Russ, good question. For those of us who have day jobs, what 1 or 2 international banking reports would you want? I would go with, what you'll do is the great thing about what I showed you today, Russ, is if you understand how the market moves in relation to interest rate expectations and economic growth, that permits you to have a day job and do significantly well in the foreign exchange market. And those can be very good trades. So the best reports that I recommend are the longer term perspective reports. So if you go to the Saxo Bank website, for example, they actually have weekly reports. You can go to the HSBC. HSBC Bank has, you can go to their foreign exchange analysis, and you should be able to pull something off their website. if you can get, John Hardy's daily review. So you can spend, like, for example, if you have a day job, just take like literally 5 minutes a day and read John Hardy's report, and he'll give you a real feel for how the verbiage is integrated into the market and how it relates to price action, different relationships between the different securities, and the general tone for the longer term. He can give you that as well. So that's why I say that if you learn this, you really get into some good long-term positions and are able to capitalize on it. Okay? And sift through the reports, at Saxo and so forth. CP, you'll have different feeds. There's a lot of different feeds. You can get free feed through your broker. You can get some feed through this. There's all kinds of different sources on feed, but or you can pay a lot of money. Like a Bloomberg feed can cost a couple $1,000 a month. There's a lot of different places for feeds. You want to be careful about getting too wrapped up in the feeds. Sometimes too much information is not good. But what we learned today is to get a feel for the general overall tone of economic growth, inflation and rates and movement in rates, and how capital flows will move with rates. When there's high risk aversion, would traders tend to avoid the carry trade and instead do the opposite, and the result is a large capital inflow into low interest rating paying safe haven currencies? Generally, yes. You're going to see the yen and the Swiss franc rally, and the Singapore dollar rally in a risk-averse environment, because traders are moving out of the carry trade, out of risky assets like Aussie dollars, New Zealand dollars, and so forth, back into the funds that were borrowed to carry the trade. Okay. Why are most supply figures no longer being used in the USA? I think it was actually M2 that they cut out. Well, basically, Gene, is because the Fed wants to hide some of the financial realities of the economic disposition of the U.S. Government from the U.S. population, so that it continued to reflect, so that they can hide the negative tones of the mismanagement. Should I continue? They're basically hiding realities is what they've done, Gene, in hiding the M2 money supply. Okay? They just want to hide it, and it's absolutely outrageously. It's illegal and unfair and against our constitutional rights, and it's blatant crookery. Okay? Those opinions expressed here are not those of the institution, rather maybe my own personal views. And my personal views can change from one day to the next. Okay. Are the LIBOR rates important to the money flow in between the international banks? Is it something that you watch? No, I don't watch it really too much. I don't really watch the LIBOR. It's more or less, the LIBOR can also be reflected in the 2 years, but I don't really even watch the 2 years much. I generally watch the general tone of the overnight, the changes in the overnight rate, which is what we talked about today. Okay? Where to hear not live news to tread the news, and which program traders pay attention to? Just listen to Bloomberg, and you know what? All this stuff is going to come out in Bloomberg. If you listen to the analysts, fund managers, currency analysts on Bloomberg, like for example, I'm on Pacific time, so usually before London opens, we get Asian and UK. Actually, during Asia, we get some of the analysts out of Hong Kong and Singapore, Tokyo, Hong Kong, Singapore, and sometimes we get foreign exchange analysts out of London before London opens. So just watching Bloomberg can give you a real feel for everything we talked about today. And now when you start to listen to it, it's going to make a lot more sense to you. Okay? Which news reports do you like the most from the ones you gave? Well, I mean, UBS is fine. You can get that at Saxo Bank. Get John Hardy. Get the daily reports from forexnews.com automatically mailed to you. It's all free. Go to Bloomberg and pull off the currency reports there as well. Okay. Where can one access the charts showing the 2-year interest rate differentials? Oh, those just come up from time to time. Those charts were pulled off Insider Reports more so. So a little you can get those actually. They'll show them on the BMO website. You can go to ScotiaFX. ScotiaFX, I think it's Scotia_FX.com. Just go to Scotiabank, go to the foreign exchange department, and you'll often see them there as well. Showing the 2-year rate differentials. Does John Hardy have his own website? No, he's a Saxo dude. Feds are hiding the fact how fast they're printing. Yeah, totally, Joe. Yeah, you got it. That's a whole. I mean, you can have a 3-day seminar just on that subject matter alone. Back to the gold standard. It's a high possibility, Jim. That can actually happen. Back to the gold standard can happen. Totally. Ed, seems like there might be a bull trap in U.S. equities with earnings showing mixed to worse and the housing market in decline. Seems like this may lead to another major unwind as write-downs continue. Soros recently commented that he thought. Yeah. Ed, yeah, you're totally right. I don't think the whole unwind scenario is over. I think there is more potential for risk aversion and yen strength. So therefore, I think you are correct in your notion. If, how, and when that happens, we don't know. We just need to have an ear to the ground on this scenario. Okay? Which time frames the bank trade the most? Vincent, they trade all different time frames. They will trade. Some trade off daily charts. Some trade off, medium-term charts. Some are scalpers. There's all kinds, Vincent. For every trader, there's a different approach. But the funds will typically, Vincent, the funds will trade off the larger time frames and the larger flows because they are not trading necessarily just currencies. Rather, they are diversifying into different currencies. Okay, and they're diversifying into. Let me. I just got to change this window. Okay, they are diversifying. So I want to just so that the video can see this. Funds will diversify into currencies on a large scale. They're not necessarily currency trading. They're just flowing their funds into based on risk and risk aversion, based on everything we talked about today. So they are typically looking at the larger time frames to do that. Okay. Equities would decline after this rally. Your thoughts? Which rally? I'm not sure which rally. The rally after the current equities rally. I'm mixed on the equities market. I think that we can be largely range bound, but I think there's more news. I mean, the market didn't respond much to the UBS write down of 38 billion, which is less of an inclination to move aggressively into risk aversion because the market feels as though that's already priced in. So therefore, I don't think we're in for a significant equities decline in the near or medium term. We just have to keep an eye on that on a week-to-week basis. The RBS reports today you can only get if you're a client of the bank. Unfortunately, Yeah, trade recommendations, I mean, I wouldn't pay much attention to those, to be honest with you, because they can be 50-50. The trade recommendations, it's more the tone of what they're talking about rather than the trade recommendation. Okay. Okay, the trade recommendations are all a matter of perspective, keeping in mind that these are analysts and not traders that are making the recommendations. Okay. If you're a client of the bank, yes, you're paying for them because the bank's making a lot of money off of you. Okay, Bloomberg. We need to listen to you. Yeah, Jim, you need to listen to the PTC whenever it comes out. Now, I'm on a long trip. I'm gone most the month of May. I'm in Singapore, and I am in Monaco for a holiday, and I'm in Raleigh for a workshop. So May is a bit busy for me, so the quality may not be the same, but you need to go through some of the older files as well. Another war. As far as the carry trade goes, I don't think we're moving into a significant carry trade opportunity just yet, but I'll let you know when. We don't know how long that's going to be away, but trade long only Aussie yen if that's the case. Right now, long only Aussie yen. You mentioned you had a favorite fundamental strategy. Long only Aussie yen, and we'll cover that in the Pro Traders Club. And it's already covered in the Pro Traders Club, so when you go in there, you will see it. Hey, Daniel from Rio, how you doing? Good morning. Yeah, Bank of New York Mellon, they also have a report that comes out that you can access. Okay. Do you think we're heading for a free fall? Wes, I'm not sure that that they're going to allow for a free fall. I mean, we've already fallen pretty free as well. It depends on what you're referring to, U.S. dollar. What is your favorite currency to trade and why? Long only Aussie yen at the moment. I like to trade the pound dollar because of volatility. Long only Aussie yen because the carry is so favored there that it has a strong fundamental foundation, so it doesn't take much of a move into risk for that sucker to rally, and it bounces beautifully off support and resistance, and dealing ranges, and it moves very nicely on a range basis, and also you can get carry on those trades, whether you're doing it as an outright forward or as a spot trade, depending on who you're trading through. Do I use Dow charts? Well, I mean, right now the yen is closely related to the Dow, but it'll move in and out of relationship. Right now it is in a very strong relationship with the Dow, but eventually that will decouple or that will part. Okay. Has there been okay, it's been a great learning curve. Good stuff. Glad you enjoyed it. I think it's good stuff. Hopefully you do too. Do you use futures data through the CME for volume indication? No, I don't. Yeah, lots of archives. As Elwin knows, Elwin's a long-term PTC member and a very good trader at that. Analysis of the Nikkei for the yen, FTSE for the pound, and Dow for the US dollar is key. Do you recommend this type of market analysis? You can just take a glance at the charts, but quite often a collapse in those equity markets, of course, will move the market into risk aversion, and the yen will rally. Okay? And that means if these markets are collapsing overnight and before the Dow opens, anticipate that the yen is likely to rally more or more of an unwind in the currency trade. Hey, Daniel, how you doing? How is the spreadsheet indicating topics from past PCC labeled on your site? I have no clue. You got to go into the site. Send an email to info, or maybe Shirley can help you with that one. But you'll find it. Is a possible war between U.S. and Iran priced in? Yes. If anything, there's a war in Israel It's a possibility. What's a good way to gauge intra-market correlation as it moves into and out of correlation between Dow, yen, US dollar, for example? That correlation is going to change. It's going to move into correlation and out of correlation. Basically, right now, if you put a S&P chart and a JPY chart together, you're going to see a strong correlation. Okay, you got to be careful with Dow because Dow is a little different because Dow is hand-picked companies that have good fundamentals that give a deceived view of what the markets are actually doing. It's once again another form of deception by the financial markets that they're actually doing better than they actually are. So you're better off using an S&P chart, and when they're correlated, and when they're not, they're not. So they will eventually move out of correlation as the risk tone, the overall risk tone changes. So it's more yen related than it is US dollar related. Okay, so folks, I think that is a wrap. It's great seeing you all. I appreciate you coming out, and I hope that it improves your trading. We'll see you in the Pro Traders Club, and it's a real pleasure, folks, to have you around. I hope that you found some value in this. This is the real deal, okay, folks? I'm telling you. Fortunately, I can do this because I'm single. I don't have kids and dogs barking and soccer games. I got 19 nieces and nephews, all from the same parents. Okay, my parents had 8 kids, and those 8 kids had 19, and so they keep me busy. But I got time to do this stuff. So no, there's no saying how long I will do this for. I could quit at any time. Tomorrow I could stop doing it. I don't know. But for the time being, I enjoy doing it. Hope you get some value out of it. And it will also give you some heads up as to what else is out there in the marketplace and what to watch out for. There's a lot of crap out there, but God bless you guys, and we hope to see you around at Pro Traders Club. See you soon. Take care. And good luck with your trading, and what? Good luck with your trading, and be careful out there.